Life's financial milestones shouldn't be financial millstones. From paying tuition to seeing that dream home come to fruition, SoFi wants to be more than a bank. But are enough consumers ready to embrace the fintech of the future?
Tech companies aren't the only ones innovating out here in San Francisco. That's why every time I come out here, like check in with the privately held outfits, an outfit like SoFi, it's the online lender that's the number 26 on CNBC's 2019 Disruptor 50 list of companies that are revolutionizing, changing, and yes, completely disorienting a lot of other people in their fields. SoFi got its start refinancing student loans, although now they do nearly everything a regular bank would, from checking accounts to mortgages, renter's insurance. The difference is they've got a more personalized business model. That's why it's so disruptive. They use the web to keep in touch with their members. Lately, SoFi has made another great leap forward, launching their own exchange-traded funds. Last month, they rolled out a select S&P 500 ETF, and another one they're calling the Next 500. And now they've got two more ETFs, one based on the gig economy. I really like it. And the other one, an index they've created called the SoFi 50. So let's take a closer look with Anthony Noto, someone we've known for a very long time on the show. He's CEO of SoFi and an old friend, to get a better sense of what's going on here and what these ETFs mean for his company and what the millennials are investing in. Mr. Noto, welcome back to Mad Money. Anthony, I know you're a disruptor, but I want to start with something that's very traditional. You guys are doing so much better than when you first got there. Even when the first time we talked to you, tell us some numbers.
Sure, absolutely. In the last 15 months, we've made great progress. This last quarter, which we just released our investors letter yesterday, was our first quarter where we had a trifecta: revenue growth, volume growth in loans, and significantly improved profitability. We've meaningfully changed the core business of the company. We've relaunched our mortgage business. We've been able to more efficiently provide loans that are unsecured as well as in-school refinancing. And we've now launched in-school loans for undergraduates. In addition to that, we've been able to fund new opportunities like SoFi Money, which is a deposit account with high interest and ability to spend anytime that you want, anywhere that you want. And of course, a brokerage account called SoFi Invest. And so we made huge progress in the last year and last 15 months. I couldn't be prouder of what we've achieved, both financially as well as our products. And most importantly, we've enhanced the member experience because it's a member-focused company, providing more opportunities for our members to socialize and learn.
I've been saying about your company that you are a purpose-built bank. People say, oh, that's ridiculous. A bank is a bank. You can't change their stripes. That's actually not true in your case.
Yeah, the thing that attracted me to SoFi and to go on this journey was the opportunity to help people reach financial independence, which simply means they have enough money to do what they want. That could be having children, having a house, changing careers. And the members at the center of everything that we do. Our number one core values that our members' interests come first, because we want to help them get their money right. And if they get their money right across borrowing, saving, investing, spending, protecting, then they can get to the point that they have enough money to do what they want. And we're going to stay focused on that mission. It's great for recruiting. It's great for culture, and most importantly, our products are better because of that focus.
Okay, now, before you got there, people were worrying about losses mounting. I know the discipline that you bring. I have to believe that's reversing.
Last year, we focused on quality over quantity. And so we made sure that when we were doing loans and we were extending our operation to new areas, we were doing it in an efficient way. So we focused on per loan economics and variable profitability. Per loan economics, the variable quality of those loans, both for our investors and for us that we keep. We just had some of the highest variable profit margins we've ever had in the company's history to make sure that our loans are durable through the economic cycle. And that's probably a little bit too technically detailed for the audience.
No, I wanted that because, look, I think too many people are saying, Jim, when he's on, you just talk about all the fuzzy stuff. And I said, no, we're going to show that this place is now run rigorously. The same way that when you got to Twitter, it changed the complexion of Twitter because that's what you bring to the equation.
Yeah, well, 100%. Last year was focused on quality to make sure we had that durability. We did that. And then secondarily, launching our mobile app, our native mobile app. So all of our products are now available in the app stores, ranked very highly. And so you can borrow, save, spend, invest in the mobile app anytime you want.
You seem to know what the millennial wants more than any bank, and because the customer's always right, but right has changed. I want you to talk to me about what the millennials are buying. You're talking about, you have ETFs, you have stocks. I think the common view would be that they're all buying FANG. But that's not the case, is it?
It's not the case. So we launched SoFi Invest, which is the ability to buy stocks, ETFs, or robo-automatic accounts. No fees, no commissions, no account fees. And what we witnessed was these investors that are new and early investors started to buy stocks that were less than $10. And what we're trying to do is to help these millennials.
Do they know that that's not the cheap versus an Amazon? That Amazon might be cheaper than an under $10.
It's a
You're educated. You got to educate.
Yeah, it's a representation of that. They don't want to put a lot of money at risk. They want to put a small amount of money. So they're buying things that don't cost a lot of dollars. So we launched 2 ETFs that give them broad-based diversification, SoFi Select 500 and SoFi Next 500, that you can buy for around $10. And so you can get that diversification at a low allocation of money.
Okay.
So it was an interesting learning. You know, the account offering itself is really important. Free, no commissions, no account fees to get people over the hurdle of having to pay. And now we're educating them and giving them products that better meet their specific needs.
Do you think that they want to buy the old-time stocks versus new? I mean, give me some of the name. I hear that they're buying Ford because it's $10.
Yeah, so we list on the actual app itself the top 10 holdings.
Okay, so what would be, let's say, yesterday, today? I mean,
so
I'm going to ask you about stocks.
Yeah, there are companies that they're using and that they're investing in the gig economy, which is why we launched the gig economy ETF.
Yeah, and I've got some good stuff. You know, it's an Amazon, Microsoft, PayPal, Square. They like those.
They are buying companies like Lyft and Uber after they go public, but they're also buying Ford and General Electric. And they're focused on investing in things that they're contributing to and things that they know, like these gig economy companies, but they're also investing in things that they basically don't use, but at a price point that allows them to get into the market and learn. Because it's an imperative you invest in your 20s. If you miss those 10 years, that decade, you really have to catch up later on.
Yeah, and you can afford to lose and go for big. Now, how about you mentioned mortgages, millennials, rates are down. Millennials moving out yet? Are they moving out of their in-laws?
Yeah, buying a house is a huge economic decision. We relaunched our mortgage product on March 1st and have seen a great response. We did it just in time for the rates that are coming down. So we've seen a big pickup in demand in the mortgage business. So we're glad we retooled that business and relaunched it to give the consumer a better experience, faster approval process, faster funding process. So it was at the right time to capture that demand.
Can you contrast your company with, say, Uber or Lyft? And I say that because those were supposed to be millennial favorites. They turn out to be not that great stocks. Would your company be more, say, fintech, like PayPal Square, versus what happened with Uber? Because, look, you know the stock market better than anybody I know who's the CEO.
Sure. I think the key to our company is making sure that we continue to focus on the member at the center of what we do. We're going to help them get their money right, which means we're in the financial services industry, but we absolutely are using technology to get there. We're a mobile-first company, so you don't have to go to branches, and it gives you great convenience and the ability to apply quickly, get funded quickly, buy a stock quickly, deposit a check, get interest information, all on the mobile device. That's all driven by technology. When going public and building shareholder value, whether it's a private round or a public round, it's about making sure you educate the investors on what you can accomplish near term and long term, being balanced on valuation and balanced on expectations and not getting in front of yourself. If you do those 3 things, you can have a successful private financing or public offering.
Well, I love the journey that you and I have been on here, because the quality issue was first, of which you told me, Jim, it's not yet. Not yet. We can't meet the numbers that you want on the credit. It's obviously now changed. You're growing. You're making money on key products that you want to. I hope you come public, because we need some more fintech besides just buying PayPal and Square endlessly.
Well, I appreciate that. We're focused on building great products first, and someday that may come, but you hit the nail on the head. This was the first quarter we grew revenue, volume, and profits sequentially, and that enabled us to launch these new products like SoFi Money and give a great interest rate at 2.25% and help people get their money right.
Well, congratulations on what you've accomplished in a very short period of time. That's Anthony Noto, SoFi CEO, and this is number 26 on the Disruptor list. What a change since you got to this company.
Thank you, Jim. Appreciate it. Thanks for having us.